The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. The U.S. dollar's dominance is once again in the spotlight as 2025 unfolds, and sustained weakness is raising fresh questions about the global financial order. Investors are recalibrating how they view currency risk and opportunity. Meanwhile, the ripple effects are being felt beyond FX markets. As gold takes a breather after hitting record highs, other precious metals like silver and platinum are starting to move, drawing attention as potential hedges and speculative plays. So what's really driving this rotation away from the dollar, and where might the next wave of opportunity for currency and commodities traders alike? Well, to find out more, joining me now is Lim Jun Kit, who's a senior strategist at Phillip Nova. Jun Kit, welcome back to the show.
Hi, Hongbin. It's great to be back.
All right. Thank you so much for joining me. Well, Jun Kit, the U.S. dollar has been under pressure recently. What are the key drivers behind this weakness?
Yes, you're right. The US dollar has been under immense pressure recently. And since the start of the year, the dollar has fallen 11%, with the US dollar index currently falling towards 96, which is actually the lowest level since February 2022. So what's driving this? First of all, I think the markets are increasingly pricing in earlier and deeper Fed rate cuts, with inflation cooling and growth slowing. Now, that pressure also intensified recently when Donald Trump called on Fed Chair Jerome Powell to step down, saying that he will soon name the next Fed chair who will cut the interest rates. Now, lower interest rates would actually reduce the yield appeal for holding the dollar and making them less attractive to global investors. And at the same time, rising concerns over the US deficit and debt levels, which even lead to a credit rating downgrade in May, are further weighing on the dollar. And besides that, we also, of course, have the Trump's tariff. They are prompting global investors to shift away from the U.S. assets and also relocate them funds into other currencies or even asset classes. So I think beyond the expectations of the rate cuts, the decline of the US dollar also reflects a shift in how the global investors view U.S.'s political risk, fiscal stability, and also its policy credibility.
Right. Well, traders in the currency options market have been ramping up bets that the dollar slide has room to run. What are your views on this? Will we see a further decline in the dollar?
Yes, I actually do share the same bearish view on the US dollar, as I think the fundamentals and the sentiments all point to a further downside for the dollar. And looking at the technical analysis side of things, the outlook is also bearish. And for now, the dollar index has established a ceiling or a resistance at the 99 level. And we can see, we can expect some form of consolidation at the current level before it hits the next support level, which I see to be around 95.
Is this signaling a structural shift away from USD dominance, though?
There has been chatters on de-dollarization, I think, for some years now. But I think that the dollar's status as the dominant reserve currency is still here to stay, and any pivot away would take a bit of longer time. But for now, I would view the depreciation in the USD as a sharp cyclical move driven by US-specific factors. But still, at the same time, sustained US policy uncertainty and also the jarring deficit could continue to weigh on the dollar in the intermediate term.
All right. Well, how is the dollar's decline, though, affecting major FX pairs from, the euro to the yen and even the Chinese yuan? Which currency is benefiting the most?
The weaker dollar has lifted many of its peers in relative terms. So the euro actually rose overnight and hit the 1.18 level, which is its strongest level since September 2021. So we are actually witnessing some sharp moves right here. And the British pound also rose to a multi-year high above 1.37. And on the other hand, the Swiss franc has surged to an almost 14-year high against the Greenback. The Japanese yen has also strengthened against the US dollar since the start of the year. But over the past couple months, I think it has been consolidating, but it just broke below 143 as we speak. And by contrast, the Chinese yuan has only moved modestly, around 2.3% year to date against the Greenback. And in relative terms, the euro and the Swiss franc are among the largest gainers against the US dollar, with the euro up by more than 13% year to date, and the franc is up against the USD by about 12%.
Well, usually, Jun Kit, when the dollar depreciates against the world's major currencies, gold prices will typically rise. And gold has recently hit record highs before consolidating. What's your take on where it goes from here, though? Does gold have more room to run?
Gold has indeed been on a really strong run last year, running to this year, driven largely by central bank buying and also safe haven demand amid the ongoing uncertainty that we've seen, from trade tensions to the wars in Ukraine and Middle East. Now, this mix of macro and geopolitical risk pushed gold well into overbought territory, with prices recently surging to an all-time high of $3,500 an ounce. But now we may be seeing a start of a technical correction. Just last Friday, spot gold prices actually closed below its 50-day exponential moving average for the first time in 6 months. So this could be a signal that a deeper pullback could be on the cards. But we also see that since yesterday to today, the gold has made a comeback, breaching above this level again. So I think for the week to come, for a week or two to come, I think it is very important for us to monitor and see how the gold prices react around the perhaps the 20 and the 50 daily exponential moving average. And if it manages to close below these two EMA lines, and we can expect a deeper correction from here. But I think with that said, this still looks just like a healthy correction, and we don't think this is the end of the bull run because, with the strong central bank demand still in play and the longer-term fundamentals for gold still remain very much intact, which supports the bull case for gold.
Okay. Well, other than gold, though, Jun Kit, silver and platinum have also been catching attention lately. What's driving interest in these metals now?
Silver and platinum have been on a tear recently. We see that silver rose above $37 an ounce. So that is actually the highest since 2012. And platinum was also up as much as 58% year to date when it crossed above $1,004 just last month. Now, there are a few key drivers behind the rise of these two precious metals. First of all, as these metals are priced in US dollar, and the recent depreciation in the dollar may have boosted the demand, coming from global investors as it becomes more affordable for people all around the world to purchase these precious metals in US dollar. And secondly, I think due to the higher prices in gold, there has also been some demand shift from gold jewelry to jewelries that are made of other precious metals like silver and platinum, also boosting their prices. Now, silver and platinum, these two precious metals, they are both facing really tight supply conditions. Silver's production hasn't kept pace with rising demand from sectors like solar energy and electronics. And meanwhile, platinum is actually in an even tighter spot. The industry is expecting an almost 1 million ounce supply deficit this year. So the supply is really low as compared to the demand that are high and growing. So I think the scarcity of these two precious metals combined with the strong speculative interest has pushed the platinum prices and the silver prices to its multi-year highs.
Okay. Then should investors seek interest in these metals as well as the dollar sees further declines? Should investors seek interest in these metals while the dollar sees further declines?
Yes, I think while the gold is already at record highs, we are seeing some rotation into silver and platinum as the catch-up plays, as what they call it. So they offer, not just safe haven appeals, but also exposure to clean energy and industrial growth themes. So that said, they are actually more volatile than gold. So investors should size their positions carefully when looking to gain exposure in these precious metals. But I think in this environment of dollar weakness and inflation concerns and tight metal supply, it makes sense for them to look into these precious metals beyond gold and consider a broader mix of precious metals. So I think for traders, I think this is also a good time to get involved. The strong rallies in silver and platinum this year have opened up some short-term trading opportunities, when the momentum is building, like we've seen in the recent months. The momentum traders and the swing traders can potentially look out for breakout patterns and ride on these price trends and capture the upside while the move is strong.
Well, historically, silver, though, has been more volatile than gold. What role do you see it playing in portfolios today?
Silver remains actually both a precious metal and also an industrial commodity, which historically makes it more volatile than gold. And actually over half of silver's demand, it actually comes from industry, so things like solar panels, electronics and EVs. So its price tends to swing more with the economic cycles. So today, the rising industrial users and a multi-year supply deficit supports its long-term case. And besides that, I think silver also serves as an inflation and crisis hedge like gold, but with extra volatility. That means, you're going to have extra upside along with extra downside due to its heavy industrial demand. So practically, investors, I think, can often, treat silver as a high volatility hedge. So with a small portfolio slice in silver, that can amplify gains within the metal rally, but at the same time also add volatility to the portfolio.
Right. Meanwhile, platinum often flies under the radar here. So what makes it an interesting trade or hedge right now?
Yes, I think platinum really doesn't get as much airtime as gold or silver at all. But I personally think that this is definitely one contract that is worth paying attention to. Now, a bit of introduction about platinum. Platinum, it actually plays a big role in the automotive industry. And it is actually used in this thing called the catalytic converters, which helps to reduce harmful emissions from car engines. And also, more recently, it has become very important in hydrogen fuel cells, which are used in power, which are used to power clean energy vehicles like EVs. So I think as the world, as we move towards, the EV era, as we push for lower emissions and greener transport, platinum is definitely going to get a boost in its demand. And most platinum actually come as a byproduct from South Africa and Russia. Okay, and the output, they can't even ramp it up quickly, even if the prices rise. And the market for platinum actually has been in a sustained deficit, since 2023. And interestingly, the World Platinum Council, they actually warned that we could see the above ground stock of platinum actually would get exhausted by the end of the decade. So the supply there, I think, is really scarce. So I think for investors, I think platinum can offer a really interesting hybrid profile. It offers the quality of a precious metal, and at the same time, investors can also ride on the industrial and the clean energy growth from the platinum. But for those who are looking to diversify their metals allocation, so I think platinum is definitely worth a closer look.
Definitely sounds like it. It is an interesting asset to take a look at in the coming weeks and months as well. Well, on that note, Jun Kit, are investors starting to explore more diversified exposure across precious metals given the current dollar doubts?
Yes, with the growing doubts about the US dollar, I think we are already seeing investors broaden beyond gold, into a wider mix of precious metals like, silver, platinum, and even palladium. And I think each of these metals, they actually play a different role. You have the gold for the monetary demand, silver for the industrial growth, and platinum, the group of metals for things like auto and clean energy. By holding a basket like that, I think investors can capture multiple long-term trends and also smooth out returns, since no single of this metal actually leads every cycle. And I think as gold gets more expensive, investors will naturally rotate into the more undervalued peers. We see that silver, although it has risen a lot, the prices is still well below its all-time high. And platinum, despite making some really big moves recently, it is still trading at about 60% of its 2008 peak.
Right. Well, overall, Jun Kit, how should investors think about balancing FX and commodities exposure in this climate of uncertainty?
If your portfolio is heavily, concentrated in USD assets, I think you can consider diversifying. And many investors or even central banks, we've read reports that even the central banks are shifting into euro, yen, and gold as the reserves, as the confidence in the US dollar softens. And at the same time, a weaker dollar would also tend to lift the commodity prices. So holding things like gold, oil, metals that are priced in US dollar through ETFs or producer stocks can help you to hedge that kind of risk. And gold, especially, I think it acts as a dual hedge against both inflation and currency swings. And even a small, maybe 5 to 10% allocation in your portfolio can help to reduce the overall portfolio volatility.
Right. And finally, before we let you go here, Jun Kit, given all the assets we've discussed so far, if the dollar continues to slide, what's the next big rotation trade we should be watching out for?
Okay, so this would be a recap of what we've been discussing previously. So if the dollar keeps sliding, I think the next big rotation trade could be into alternative currencies and also undervalued precious metals. So on the FX side, the rival currencies like the euro, the yen, the Australian dollar, the Canadian dollar will stand to benefit as the capital rotates out of the US dollar. And I think now as we speak, the US dollar, it kept dipping, and all of these rival currencies, they are currently experiencing a boost as well. And in the metal space, I think silver and platinum are catching up to gold. Both are still well below their historical highs, and they are all supported by really strong industrial demand and tight supply. So I think for traders and investors, may be able to find some opportunity in rotating into these FX majors and also these sort of catch-up metals as the dollar weakens further.
All right. Well, some great insights from you there. Thank you so much, Jun Kit, for joining me today.
All right. Thank you, Hongbin.
Thank you. That was Lim Jun Kit, who is a senior strategist at Phillip Nova. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.